My name is Jason Howe. I'm a real estate and finance attorney with Pretty Flaherty. I run the real estate and finance group there. I'm going to be your unfortunate moderator for this one. Outclassed by my two guests here, both who are fantastic, both who really know their stuff. We've got Ash Sangani, who is one of the founders and controlling owners of Geary Hotel. They own and operate, I think it's north of 60 different properties throughout New England and New York. Interesting to say if you've worked with them, and I know many of the bankers here probably have. They work on sort of both sides of the coin for flagged, branded, conventional hotel chain work, but also sort of the bespoke destination, privately held and privately operated resort construct. So they get to see what's happening in the marketplace from both a financing and a development perspective, more so than most who might fall into one of those two fields. My second guest up here is Nick Margitza. He's the VP of leasing with WS Development. They're originally a Maine company, now based primarily out of Boston. Nick handles placement and leasing work all over the Northeast. Has a great sense, in my time talking with him, has a great sense of what's happening in the marketplace for retail leasing, tenancy, availability, traffic, a lot of the factors that will become driving pieces of where development, such as it is, goes in these two areas. And of course, that's sort of our common tie. What's happening in development, construction, related to these two industries, and what can we glean from what they have to say? So with that, I'll let Ash and Nick take a chance to maybe give a little bit more detailed intro, if need be, or not, and then we'll jump into the presentations. And just so you know how the presentations are going to work, you probably saw it the last time. We're going to do what we call a data dump, where we have sort of a rundown through of the two different slide decks in the two respective areas. They may seem quite dissimilar, but you'll find there's some overlap. And then we'll get into sort of a guided Q&A where we'll have a bit of a roundtable discussion. If there's time at the end, we'll probably open it up for questions as well, but we have a limited time frame. And I will just say, before the end of this thing, at the end, please stay seated because they're going to go through the process of opening these gates. So if you get up and move around, they can't open those and we can't start. So please stay seated at the end of the thing. You can mill about after that gets opened up. All right, with that, Ash, if you want to, and then Nick, anything more you want to say about yourselves, or?
I think you mentioned everything. I would say that one of my first ventures was in Maine. So Maine is always close to my heart. So I'll start with that, and then just gonna go right to the presentation. I think
Sure.
As a company, I think it's our leadership. It's what stands for. I think the macro trends on AI side, which everybody talks about. I think major takeaway is the hospitality PMS system. In all the real estate space, I've heard that hospitality PMS system is pretty sophisticated. Not taking a shot at others, but just wanted to bring that up. AI, I think, where are we using AI most of the time? I think this is a brick and mortar business. So where AI could be used will be to make this process better. Mm-hmm. At the end of the day, I would ask the crowd here, after my presentation and after Nick's presentation, how many people would like to check in at the hotel with the technology, like a self check-in versus a people check-in?
Sure.
I'd like to know that data, because that's where I tend to see is that where I get data is the people. I got a letter last week that his son got into an accident in Killington Mountains, stayed at a White River Junction hotel, and how much she appreciated our staff. So it's still a human-to-human connection.
Right.
That said, I think where AI could be used, again, like forecasting room nights, room cleaning, stuff like that, check-in rooms, stuff like that. Tariff. Oops. I think the data is missing on this side, but I can tell you what data is in there is basically when last year's tariff, how it has impacted is about 5 to 10% typically, except building material. Building material were a little higher, but I think food and beverage and room supplies were about 5 to 10% increase, costs went up.
Can we talk about that for a second too? I think I'm just going to jump in here if nobody complains too loudly. It's interesting because in the session next door, the construction management folks were talking about how they hadn't seen the tariffs really like played through, at least to the ownership and construction management level. But it sounds like in hospitality, at least, you're seeing it in very real numbers because those percentages are like meaningful if you're operating a facility and you're seeing 15%.
Yeah, like food and beverages, 5 to 10. Chemicals, 5 to 10. Room supply, 5 to 10.
Wow.
I think like you linen terry, something like that. And then building material could go a little higher, is
Wow.
what I see.
Okay. All right.
I think I brought this slide is to show that in last 8 years, about 56% increase cost has happened between front desk and rate of pay for front desk or housekeepers. So it's growth. Supplies, I feel like we are going, this is a nationwide supply. And I will show you guys the main wide supply. And I think when you look at this slide, you'll take away that two things here is that Hilton and Marriott are dominating, and Home2 is a darling. Seems like Home2 Suites is the hotel which people are building.
And we should clarify too, when you're talking about supply, you're talking about you're talking about room availability?
Yes.
Number of rooms available to the market in any
New
given area.
construction hotel coming to the market.
Gotcha. Okay. I think that's helpful to know.
So now I'm gonna give you guys a rundown between all this market. You look at, so before I go into this, right, I want to show you guys, before we go there, I want to show you guys that 24, 25, what was the trend? 25, except 3 market, Portland, Old Port only.
Yep.
Old Port,
Old Port, Portland, yep.
Bar Harbor, and Algonquin,
Yep.
upscale.
Yep.
Only 3 markets which actually went 25 up. Otherwise, all the markets have slowed down, started coming down.
Yeah.
And we all know what happened. So, so you can see that data. So again, you could see the data where the hotels RevPAR at Old Port keeps growing up. And you could see that new supply also is coming in the Old Port office conversion. So you'll see that upscale as well, upper mid-scale as well, you could see that numbers are pretty strong, maintaining the Old Port market, while on the right side, you could see it's a South Portland market, where you could see that numbers started slowing down a little bit, dropping down a little. I don't think it's a time to say, oh my God, but it's a time to raise your eyebrow.
Yeah, so you're talking about a substantial, like anywhere from a 3 to a 5% reduction in just 2 years for stays. I'm curious too, I saw the extended stay number in South Portland, and I have to wonder if that's if that stayed higher than we might have expected because of the demand for just general housing. So extended stay as a proxy for like apartment rental or carryover between places in this market. I don't know if you've got any sense of that.
So extended stay, I think you're right on that, because I felt the South Portland market was quite strong for extended stay. It has consistently crossed 80% at multiple hotel locations. But then you could see slowed down in 2025 a little.
Right.
Slight, but it's not to any level of worrying.
Right.
But it's slow down. Freeport, Bath, Brunswick. I've combined this data too, that data again tells you that the market has a little pulled back in 2025 versus previous years. So is the Bangor market, I think, pulled back as well. I'm going to take a second just so you guys can review the data. And if anybody has questions, just feel free to ask when the Q&A happens.
Yeah.
So it's Augusta Waterville. I think the occupancy stayed up pretty good in Augusta Waterville. It's just the rate you could see dropped off.
Yeah.
Ellsworth, this is my hotel. I could not get that one, full disclosure. Just got my hotel number. I said to get at least have some data. There is a new hotel, Home2, coming, but Ellsworth was definitely strong. Bar Harbor, again, my hotel, I think did very well. Algonquin, same. This is my hotel's number. I could see luxury grown up, and you could see the upper mid-scale slowed down.
So the availability of better rates at those premium markets are helping to keep the financials high, even if occupancy rates are slowing a bit.
I believe Canadian effect.
Okay.
I believe Canadian effect because that off-season, shoulder season is where we dropped a lot. And
Okay.
we felt the miss. July, August felt like it was like every year.
Yep.
But then
We'll come back and talk more about Canada in a bit.
Portsmouth, Kittery. I thought Portsmouth is in New Hampshire, but still should be part of this meeting, so I brought this up as well. They got 3 hotels in that market came up, so that event it's catching up now.
Yep.
So this is what we have sold for about 11 hotels in last 3 to 4 years. When I look at this stats, what is the biggest one what are 3 biggest thing I want you guys to take away is that if you have assets under $12 million, your asset value is holding very well. You could have interest rate at 8.5%, or you can have interest rate at 5.5%. Still the value is holding. You could look at markets like Bar Harbor or Wells Algonquin, Kennebunk. Your per key basis is easily 150 and above.
Wow.
But when you're looking at anything outside, about 100,000 a door.
Wow.
And it actually has, if somebody looks at 10 years old data, I think they were 50,000 a door. So because all this inflation and the value is still holding up pretty well. I think running a hotel, I think I feel like you guys are also a customer, so I need to to let you guys know that pool systems are taking 6 months to fix sometimes or more. It's not easy. HVAC system, elevator. I think all those, it's just becoming very difficult talent-wise. Mm-hmm. I'm sure Nick will tell it similar. Cost of construction, I think the sign is to flattening out. Mm-hmm. I think 50% of your new construction project, if you have a 100-room, $20 million box, your 50% is labor, 50% is material. Mm-hmm. And you could see the flattening happening. So maybe the labor is dropping a little bit more, but the materials slightly keeping 2 or 3% up. Mm-hmm. Demand countrywide is going to grow this year. They just revised it to 1.3% growth. I think Maine is between 5% to 2% negative. It's all trade deal with Canada.
So you're saying, just to be clear, you're saying there could be anywhere from a 5% growth to a loss of 2%. It all depends on what happens with foreign visitors, basically.
Exactly. So all Expedia booking in last month have showed that there is a chance to grow.
Interesting.
All the trends are looking up. So, but how can I quantify that?
Sure. And of course, that could change.
Hope not.
I hope not. Only if we're talking about 10% growth and not 5% growth. That's an okay change. Right. We'll take that.
That's a good one. That market, I think, I felt has got improved the last 12 months, and I felt the pressure of bank deposit has slowed down a little bit. Otherwise, you could always hear, hey, where's my bank deposits? So that's fair for a complete business account relationship. So business travel has picked up, I think, recently. Mm-hmm. Group business is actually keeping up for last 3 years. I think if you look at one trend steady for last 3 years is group. It keeps growing.
So like hockey tournaments,
It's called, yes, the Smurf, the sports team, the military, the entertainment, everything. It's just the whole group segment is just, even group business too, it's going up. Mm-hmm.
Sort of business retreat travel or event travel.
Yeah, leisure business, I think, has been declined. Mm-hmm. And last year, I think that was in Maine, it was more declined than overall, I felt.
So Maine is usually pretty insular, but you're thinking that in Maine last year, the actual leisure travel to Maine was down.
Down. So we looked at certain data. Canadian, when we go to Canadian...
We'll dive into Canada.
Yeah, that's where that data will help. And again, what I mentioned about asset under $10 million. I think it's holding super value. Right now, I've been seller for smaller hotels, and I command what we want, and we get it.
Yeah, that's can confirm.
So I think what I would tell all of you guys is to travel.
And shop.
No bias here, but just travel, go to our hotels, and
Come to our shopping centers.
and shopping centers.
Shop at Nick's
And
places.
hopefully you guys don't need any lawyers.
Definitely not.
So thank you all for listening.
And if you have questions, save them for the end. We'll circle back. We should have a few minutes after a guided conversation here. Nick, feel free to give a further in-depth intro if you'd like.
Yeah,
I was
thank you,
fairly
Jason.
sparse.
No, that's all good. I'm Nick Margitza. I'm a vice president of leasing at WS Development. WS Development has its roots in Maine. We're now Boston-based. Our bread and butter are suburban shopping centers throughout the country. Over time, we've transitioned and expanded into mixed-use projects all across the country. But like I said, our real bread and butter is here in suburban New England, and our roots are here in Maine, and so are mine. And so it's a special place for me, my family, and our business. Super thrilled to be here today. Thank you, Jason. Thank you, Ash, and thank you, Shelly and the team for asking me to come back today. I come from a unique and kind of focused lens on the retail leasing side of the business as it relates to investment sales and other kind of components to it. There are way better experts in this room, and I'm looking around and I see them all, and happy to provide good recommendations for that. But I'm going to keep my information kind of focused onto what I do and who I work with. And so we can kick things off here. This is a big photo of me. I'm going to move on from that as quickly as possible. Thank you. Okay, so a couple of things that we're going to talk about today. We are going to talk about, so one of our data sources is Placer AI, and it's a tool, not the tool, and I'll continue to say that. And we'll just talk about really like what that means and how we utilize that for a variety of different aspects of our analysis and some of the data that we put together today. We'll talk about the retail landscape here in the state of Maine and nationally, where there's similarities, where there's differences. Maine is a unique market, that's for sure. But some of the trends are, they correlate all across the country, and that's for sure what we see. A fun slide about new and expanding retailers. Bunch of names you're familiar with and names that you soon will be familiar with, no doubt. I've created a couple of top 10 lists as well, which I think are interesting because I think some of the insights that came from that will spur some conversation for sure.
People still like fast food.
Oh, that's for sure, yeah. We'll see more on that. And they love grocery shopping. And then talk about new and planned development and kind of what that looks like. There aren't too many shopping centers, pure traditional retail centers coming out of the ground. And so it'll be interesting to talk about kind of what is and why that is. All right, so quick slide on Placer AI. I am not an expert, but I'm going to give you guys just like a little rundown on it. So this is a location data company. They estimate foot traffic by buying third-party data from every one of your cell phones, whether you know it or not. And what they do is they create these geofences around particular properties, and so we can track through a modeled number, like what are annual visits, what does that look like, where do people come from before they come to a property? Where do they go afterward? What are the demographics of the folks that do come into these different places? So I'll end it by saying what I said to begin with. It's a tool, not the tool. And what we utilize is our conversations with retailers, big, small, in the middle, regional, local, nationals, conversations with brokers, conversations with other developers, contractors, everyone. We use that information together with some of these insights to create our strategies and leasing strategies, across our portfolio. A quick just overlook of kind of the retail landscape in Maine. Probably most people in this room fall into one of these, MSAs. And I'm sure there's some folks who are putting their hands up for other places like Ellsworth and surrounding markets. Just kind of some basic stats here. Nothing I don't think we can spend too much time on. Statewide versus nationwide snapshot. And so talking about some basic retail fundamentals. The retail vacancy rate remains relatively low here, 2.8% compared to the nation average of 4.3%. I think that's a unique kind of look into, and it spurs the question as to why. I'm grateful I work on a number of different properties throughout northern New England, And one thing that I think differentiates Maine from places like Greater Nashua, New Hampshire, or Greater Portsmouth, New Hampshire, is that it has not been overdeveloped. And so you've got this you've got nice fundamentals there to continue to keep properties valuable as retail trends shift. And so I think that that's something that makes Maine unique, and will continue to make Maine a valuable and interesting place moving forward.
And Nick, can I ask a question on that too?
Yeah, please do.
I mean, do you see the 2.8 as potentially problematic for continued growth for retail, or is that about the right number where you're sort of walking the line between property value being high, strong, like landlord market versus availability of space? I mean,
yeah, that's an interesting question, and I think that really it's there is going to be a baseline set of vacancy baked into these markets because it was built and developed to accommodate a particular type of retailer.
Gotcha.
And as that changes, the real estate's got to change, and sometimes properties they do that at a different pace, right? And so spaces that sit and are sort of waiting for the retail from yesteryear to come back, they might wait a while because like things are changing, and you've got to be able to reinvest and adapt to become relevant for other retailers.
so we could extrapolate from that to maybe that 2.8 is actually in practice lower unless you're willing to refit one of maybe these older or outdated spaces. So it's maybe a skinnier bit of availability for tenants coming in, but
There's
maybe
no
better,
question. Yeah.
better for landlords if you happen to be an owner.
Totally, and I think, I mean, this is retail is funny because it really, the basic real estate fundamentals of location, like
Right,
really
right.
nail it down. And as you look across different markets in Maine, Freeport comes to mind, right? Like if you're right in the heart of the action, like the spread between vacancy and rents really range just by like a few hundred feet, right? And so I think like that's no doubt true in every market, but I think in Maine, where you have such limited to smaller market with fewer retail nodes, that becomes really emphasized. And so I'm sure some people look at this and say, well, in my market in Maine, it's quite a bit higher than 2.8%, and I totally get that. I see these different markets, and I understand that. So it's an interesting thing. I think the disparity in retail is probably more profound than in other markets across the country. Alrighty, this is a fun slide. This was a good one to put together. So new and expanding retailers, a bunch of names that y'all are probably familiar with, and then some new ones as well that are growing. One thing that stands out to me is just sort of the categories that these guys fall into. So convenience and value is one of them, and Market Basket jumps off the page, right? Like these guys have come in and made a huge splash in the market. Totally unsurprising in the sense just because of their reputation and what they do and how well they do it. There's going to be continued growth, and as what's been made public, of course, in the project in southern Maine and Scarborough, and I think that will continue to grow. And I think it ups the ante for all their competition, right? Like when we've got a new player in the market, like Market Basket, that it's going to create that nice competitive landscape for everyone. Aldi is another one that jumps up to me that fits into that category. It's an interesting thing that they're making their way up here into New England, differentiated offering, smaller format stores, unique products. That's going to be that again adds to the competition here in Maine, and folks are going to get in their cars and go visit these places differently. A couple other trends that pop out to me as I look at this are just like the health and wellness trends. If any of you guys attended my presentation last year, that's something that we did call out as a continued growth in that, and health and wellness. Like that used to mean just like a big box gym, right? And now, of course, there's still big box gyms, and Planet Fitness has expanded pretty aggressively across the state. And I just want to call out Miller Fitness too, like an amazing local company that has done great work and opening locations across the state. But health and wellness, that encapsulates so many different things. What people eat, where people go, right? It's the med spas. There's a whole variety of different things, that fall into that category. That ranging, like I said, from the big box retail to boutique fitness, to kind of medtail retail, right? With the medical services that are increasingly a big part of what we do in trying to attract and build properties and lease them up the right way. Another trend that pops out from this slide is the transition, or not transition, but just the outpaced growth of fast casual restaurants versus sit-down full-service restaurants. And so the differentiation of those types of retailers and the pliables and oolables, and they fall into that category. Pop-up bagels, an amazing ad here in Portland Square, and kudos to those guys. That's a great addition. I think there's just going to be continued growth in that subset, and I find that pretty interesting. One thing that there's only one soft goods retailer or clothing store listed here, and I think that is something that's worth talking about for a second. So historically, a lot of these shopping centers were built to accommodate national growing soft goods clothing stores. Over time, as these retailers have gotten a bit smarter and a bit more analytical in how they expand into markets, more strategic, they've got fewer bullets in the chamber, so to speak, and that's where I think Maine has a disadvantage, right? Like our population density, the incomes, like that's something that is going to continue to be a challenge and something that we work towards. And as great things happen in the state of Maine, Rue Institute comes to mind, more companies land here, like that's the type of movement that is going to cause more retailers to say like, hey, this is a place that, where we got to land and express the brand, because there's a lot of green space to go ahead and do that. Moving on. So we'll take a look at Maine's visitation trends at indoor malls versus open air centers. Maine is pretty funny in the sense that you've only got a couple of these enclosed malls, whereas like in other states to the south, you've got a whole heck of a lot more of them, and so the data is a bit different. But I think as you look at this data, what you'll see is that there was an initial pretty substantial shift right into the away from the malls and into the open air spectrum. And what over time has happened since sort of pre-pandemic to today is that started to stabilize. And so I think what that proves out is that there's still a place for both asset types, but you're going to see continued growth in that open air model, and there aren't any new, enclosed malls coming out of the ground anytime soon. I think that's just a key reality that we're all seeing. One thing I in my notes I was thinking about is just how it's reflective. These properties are a mirror of the consumer, right? And it reflects just our behavior. People want convenience. People want to pull in. They want to park, execute on their errands, go shopping, get your dog some food, grab some lunch. If you had hair, get a haircut. All those different things that you have to do in your day to day, right? And so like if you can go out and just go park somewhere and go execute on that, great. And so like that, the open air center really helps support that, or it better aligns with the consumer behavior. And so I think you'll just continue to see that.
And probably unstated there, but implied through a negative, is the availability of opportunity for people who want to build out and maybe get creative in space that's in the enclosed mall systems for those kinds of services that would be within. So like infill for churches or play spaces.
For sure,
or,
that's right. Less and less of these expanding soft goods clothing stores, and more services, more experiential type retail. And in a place where you have to go walk, a quarter mile within a mall to go make something happen, like you're going to find more and more of that.
Yeah.
Yep. Alrighty. So we created now into our top 10 list. So these are interesting and some insights that come away from them. Unsurprisingly, the top 10 most visited shopping centers kind of fall right along those the MSAs that we had talked about, right? Marketplace at Augusta, WS product and a great project. Over 1 million square feet, 40 plus shops, national, local, regional. That's kind of the magic sauce and attracting and becoming differentiated amongst, that way you're not, just cookie cutter anywhere America. Like that's really our design and strategy, is to make these places different and feel local and good. We're limited on time, so I'll keep running. But
the hook was coming.
I've got other stories about the different ways we make that happen, and I'm happy to talk to folks about that outside of that. But some interesting insights I think that come from this list, and they follow what you'd expect.
And interesting to your point though earlier about development too. If you want to flip back to that slide.
Yeah.
Placement is everything. 200 yards down the road makes a difference. The placement of Marketplace at Augusta outperforming traffic to the greater Portland mall locations is, you talk about a confluence of streets and population, talk about a story that's told about, location.
The watering hole in the Serengeti, as somebody told me.
It's true.
It's really true. Somebody told me that, and it's really stuck in my head. It's like a totally interesting thing. And
this oasis.
Yeah.
With apologies to WS, I'm sure you guys are great, but. location.
Totally.
I didn't want that to get missed.
No, that's perfect. It's a good point, and it segues nicely into what I'm going to talk about next, or over the next couple slides. I was on the phone with a retailer based in the southeastern part of the country the other day, and what they brought up was that, Maine is like the home of the hub town, and it's totally true. The traditional way a retailer looks at getting into any market is they're looking at the 2, 5, 10 mile radius and population density. Anyone from Maine knows, like, that's just not how we work up here. People are fully prepared to hop in their cars, drive 45 minutes to go execute on some of those daily needs shopping. And so, anyways, it creates and as we get into the restaurants, you'll really start to see that. But I think that's an attractive way as we talk about, like, in trying to inform everybody on how we can all make more deals. I think that's what we're all here to do, right? It's just really selling on that point. Like, you have an opportunity to be a bigger fish in a smaller pond, and the sales potential relative to a market rent in a great Maine market versus a greater Boston suburb, as an example, is that's a pretty attractive way to start talking about business. So I think that's something that's interesting. All right, quickly on groceries. I don't think anything from here is too surprising. Market Basket has made a big push here and is doing tremendously well and driving a ton of traffic. And this really speaks to, like, what at the core drives our business, which is in retail real estate, is the proximity to grocery. Like, people still love to go and grocery shop. Go try and buy a tomato or a melon or any type of food online and have it shipped to your house. You want to go do it. You want to go do it. It's part of just like who we are as humans. We're social people, and this is what we do. I think grocery is going to be a continuing and evolving and an interesting landscape here in Maine, where you do have some growing retailers and making a big push here with a lot of green space to continue to do so. All right, so this is our top 10 restaurants list. A lot of McDonald's okay. No one wants to talk about McDonald's or Chick-fil-A, really, for that matter. But what I think here, what's interesting, is what these top 10 lists, it doesn't follow those MSAs, right? And that goes to the hub thing that I was talking about earlier, right? If you have the best located restaurant in a small market in Maine with a lack of competition, there you go, right? Like, you're going to drive a ton of traffic there, and that's a huge selling point I try to make as I work to make deals all across the state of Maine and in New Hampshire too. Is that you have that opportunity in a state like Maine to really be like a big fish and outperform just based on a lack of competition. It's interesting as you look on this list, not a whole lot in Greater Portland because you're splitting the pie in so many different ways. So anyways, I thought that was an interesting insight, and while it's one or two names, there's more to come, that the data speaks in a different way to me as someone paying attention to the market. Okay, talking about some new and planned retail development. So what you're going to see is that, or I guess to start, you're not seeing a bunch of new power centers, single tenant stuff coming out of the ground. What you're seeing are these mixed-use developments where you can blend the work, play, live kind of component, where you've got residential, you've got hotels, you've got a bunch of restaurants, you've got medical offices, and creating an environment where the leasable space, quickly is picked up because they're seeing the strengths of those different streams of customers, really benefiting from that. I call out here Rock Row in the Downs in Scarborough, just an amazing collection of properties. But and then I'm from the greater Augusta area. I grew up in Waterville. There's some great stuff going on in Central Maine. The old Kmart Plaza in Augusta, that's they're in the works of turning that into a mixed-use development. What a great opportunity to take an empty, vacant Kmart and go put a bunch of people and densify it, and no doubt salons, restaurants, and other types of service-oriented retailers come right behind. I want to call out the Downs. I think what they did was kind of an amazing thing where they led with the residential, built up that pent-up demand, and guess what? Yeah, cafe wants to go there, or this or that. It all kind of logically follows. But two great properties, two that match sort of national trends that I expect you'll see more and more of moving forward.
And I just say we're going to have to run down, if you're close, we're going to have to run down through. I think you are close.
Oh yeah, this is it.
Oh, perfect.
This is it
All
for
right.
me. Yep. Yeah, I'm talkative, chatty cat.
I want to make sure we get to talk about Canada.
Okay. All right. So some predictions. I talked about a bunch of this already. Low vacancy, high demand. I think like you're not seeing that new construction for a variety of reasons that people have talked about all day happen here. And so if you've got the product, there's going to be demand for that. I think the ability to reinvest and redeploy existing assets is going to be the key to that. And so we'll see more of that. Open air advantage continues, so we talked about that. That's going to continue to be the case. It is nationally, and we'll see that here in Maine where there's less of that enclosed mall competition. And then lastly, mixed-use development and redevelopment are the future. So, I mean, everything from adding a new pylon sign or a new facade to structurally re-engineering a building. The Jetport Plaza in South Portland comes to mind. Lop off the back, some flex industrial space. Do a new retailer in the front, like all of a sudden your asset's a lot more interesting, and that's how that reinvestment is absolutely necessary to stay relevant. I think that's all I've got.
See, I jumped on you too soon. I should have given you that one last slide.
That's okay.
All right. So with that out of the way, it sounds like you see sort of different trends for the different sectors, but I think it's probably worth talking about some of the things that are going to impact both this year for both of your different sectors, and then when we talked about that, I think we should also talk about how the numbers that get posted this year are going to dictate what 2027 looks like, notwithstanding the fact that 2027's numbers are going to be different. So one of the things that when we talked about this stuff offline kept coming up, and I think is worth spending some time on, is Canada. We've only said it 15 times. For any of those South Park watchers, you know the quote that I would like to say. Who do we blame? Or benefit from? So it seems like it's worth sort of discussing how Canada serves as a bit of an X factor in the tourism and therefore the spending at retail and at hospitality in Maine, which is going to be dissimilar from the way that it impacts Boston or other areas.
Yep.
So spend a little bit of time on that, Ash. Can you sort of walk us through how it impacts you and what you're expecting to see?
Yeah. I think
As long as you don't die in the meantime. We're just so everyone knows, Ash has just come back from the dead, basically. He has the cold that I had last week. It is a flu. So the fact that he's here is remarkable. He's totally not contagious. Sorry, Ash, go ahead.
thanks, Jason.
Yeah, always happy
That
to
was
help.
a really helpful insight.
There's your insight for the economic condition.
I would say Canada. So every time when state of Maine says that way, this is how I see numbers. Every two visitors comes to Maine, one of them stays overnight. So it's about 16 million people visits Maine, 7.5 million people around we get in the room nights. So 2:1. So just remember that data, and always remember this data. That out of that so about 7.5 million, you would assume about 80%, which is almost 6 million people, will come back again. So Maine has that 80% repeat ratio. Like that's a really good data. So from that point, back to Canada, I think 30% is the number. So before Liberation Day, right before Liberation Day, the numbers were dropping. And it continued second quarter, 30% drop, third quarter, 30% drop, and I think fourth quarter is also 30% dropped. So I think that 30% drop is the number from Canada visitors coming to Maine.
And when you're saying 30% drop, you're saying for that quarter, 30% drop, not a 30% drop again, just relative to prior quarters. So
Year over year.
Q2 dropped 30%, Q3 dropped 30% over prior Q3, not over Q2.
Yes, correct.
Right, okay.
So
we're not aggregating the drop.
No, year over year.
Yeah.
So it's exactly what you said. So it's 30% drop. So I don't think it's we have the ocean. They have to come.
So you think they'll be back?
I'm cautiously optimistic. I feel like just that House passing that bill, I feel like slowly the spigot will open.
And that should have, I think if we were talking about this, 2 months ago, the worry would be, what does that mean for tourism numbers? What does that mean for overnight stay numbers? What does that mean for spends on the retail side? And the sentiment was, I think we all heard, pretty negative. And so you're saying now, though, that there's some optimism in terms of what you're seeing for future bookings and some of the placements for those bookings. And
I'm cautiously optimistic.
that's That's as much as I ever get out of you, Ash. People should take comfort in that. Nick, you want to, obviously the overnight stays and tourism plays into, your
No
business
doubt.
as well.
Yeah, no doubt. One thing I want to call out is the Placer data information that we had used, which talk about traffic. The Placer only uses data from us American citizens, which is very interesting. And so it does exclude this 30% drop in Canadian visitors. That's huge. Like that translates into every one of our, the businesses that are a tenant in one of our shopping centers, and I've seen it. I've seen comp sales, year over year in full service restaurants. These are the types of places that tourists come back to, right? And so it's a major impact on our business. I am optimistic that the gregariousness and kindness of Mainers will outshine sort of any negative sentiments about what's going on sort of geopolitically, and that people will come back and venture back into our state and enjoy all the great things that we have to offer.
So we can keep our fingers crossed that we'll see good hospitality numbers again in 2026.
Yeah, I think, I feel like the worst is behind us. I don't think worse is next year. I think all the numbers are stating that, look at this year, right? There is a World Cup.
Yep.
There's a tall sailboats coming up, 250th anniversary. I think there's a lot more positive momentum. Mm-hmm. And I feel like US, we won't have net export going to Mexico a lot more now this year with that drug cartel thing. So I think that also allows our.
So you're thinking about retained tourism rather than southerly facing, maybe to a beach in Maine instead of a beach in Mexico. Oh, hey, sounds good to me. Yeah, we'll see. Nick, do you share the optimism, or is it an unknown for you?
I think part of that is unknown, and I think there's a lot of different factors that factor into that. But I think I'm generally optimistic that Maine has so many great things to offer, and I think that will overall rule the day and drive traffic to our places. Yep.
So for the lenders and brokers in the room, we can expect that strong retail and hospitality numbers. We just need to get rates down to where we can build some new projects or more easily retrofit. We've got a little bit of time left, unless either of you guys have anything else we didn't touch on that you want to dive into.
Open question.
I know Ash has been asking me to open it to questions, so
Thanks, Jason.
We'll take the risk. If anyone has a question, I don't know if we have a traveling microphone. If not, I can.
Oh boy.
Oh, there's. Yep. Buckle up.
Two questions.
Only because I love you.
Yeah, thank you. I got a question for each of you guys. Also, great presentation, good work. Nick, your top 10 most visited grocery stores, is that Placer data?
Yeah, it's based on Placer data. Yeah, it's not perfect.
Where's Whole Foods on that list?
Yeah, it was interesting. I actually noticed that as well, and that was one of my first call-outs there, was that it wasn't on that list. It was certainly in the top 20, but I was surprised that it wasn't higher up on there, and Trader Joe's too.
Yeah, I was okay.
Yeah, yep.
I was just wondering if that was omitted or if it's all Canadians that shop there.
No, it's interesting. No, I had the same observation, Josh. It's good. It's a good call-out. Yeah.
And
I also think it calls out like that. Maine's not just Portland, right? We all experience it from a certain angle, but yeah.
Actually, and Josh, there's something here. Anyone who's spent time in Canada should know the Canadians love Trader Joe's. Like, it's a thing.
Yeah.
For those of you who know, Costco, but specifically the food at Trader Joe's is that's a thing that people will go for. I've got friends who flew up from BC and were like, oh, let's go to Trader Joe's.
Ash, second question's for you. On your RevPAR data, where you're showing the different areas of the state of Maine you guys have operations, Waterville, you had 60% occupancy, $136 per night RevPAR. For hotels like that, are you considering converting them to housing where you have lower overhead and identical revenue?
No, I think the markets right now supports it. So that 60% doesn't make us to feel like all looking for alternate.
And probably safe to say too, Ash, that those particular properties don't have the internal infrastructure that would make a retrofit efficient for cooking and for
all the life safety and everything.
Just thinking about like a Gunkwit.
Yeah, all the kitchen equipment and all.
Yeah.
Good point.
Yeah.
Good question.
Anyone else as brave as Josh? Yeah.
Just getting back to Whole Foods, do you think it's because it's a smaller store that it has less visitors? Or is it a smaller store?
Yeah, it is. I think it is a smaller than their typical as their new prototype. Their prototype constantly is changing, but I do think that it is their store here in Portland is from an older prototype. I don't know how much the square footage would change, that trend, but I was surprised it wasn't on the top 10.
Nick,
You hear it crushes it.
Oh no, for sure. It's a high performing unit from my knowledge as well.
high performing on price, but it does beg the question too.
Yeah, that's for sure.
And by price, I mean margin. But it does beg the question, too, to your point earlier, Nick, there is a dilutative effect by virtue of being in the greater Portland area. And if you have similar demand at other sort of locations or farm-to-table type farmers markets, you're probably pulling away from...
That's exactly right. You're splitting the pie in so many different ways.
Yeah.
You think about the Rosemont markets of the world, all these great independent...
That's a great example.
Right? It's like,
Yep.
I know from a consumer standpoint, like that's just the case, right? If you're in a market where you don't have that much competition, of course, you're going to have more concentrated traffic towards those, the single grocery stores, which I think all that data totally supports.
And I meant to ask you about this earlier, too. Does that outdoor concept and the sort of growth or stabilization in that space lend itself to like the carry-out pre-prepped meal type of service in addition to the quick service? Do you think that's coming, or?
Yeah, that is interesting. That is a part of, and we're going to get into the weeds here for a second about how these grocery store leases come to get. No, that's for sure. Grocery stores, that's an important part of their business. I don't have the expertise to say how much of a part of their business that is, but typically these grocery stores protect against a lot of retailers doing that type of prepared foods because no doubt from a consumer standpoint and sort of a behavior trend, there's more and more demand for that kind of thing.
Well, and interesting too on the interplay, and this is sort of the real estate in me coming out. If you look at any of the publicly available deed restrictions and covenants on any of the shopping plazas, you'll know how much and how heavily they're restricted. But if you've got mixed use too, and you want somebody who wants to come in with a hotel, spa, and coffee shop, query whether that violates the underlying deed covenant or restriction that the Cornerstone Shopping Center has imposed by virtue of coming in. Is it then preclusive of the types of things that might be ancillary services? So
now that's why we have got great guys like you, Jason, working on these lease documents.
Trouble.
You guys want to come work with us on a 60-page lease document that breaks down all these different restrictions and exclusives and all those co-tenancy clauses? We can talk all day about it.
Nick loves this idea until he has to pay Holly to fight with me about it. So that's where the enjoyment ends, I think. Any other questions from the crowd? Any brave souls? Step right up to the microphone or holler, I guess.
It's a really good question. It's a really good question, and it's difficult to structure, leases that have to accommodate for that very fact, right? And I think in Maine, it's more pronounced than in some other places, but they generally do follow like typical retail trends. January and February are tough months, right? In the summer, things get busy. Christmas, busy time of year, right? It's the same everywhere, but they're a bit more dramatic here. But it is totally a challenge, and I think that's on part of. I give great kudos to the the different tenants and small businesses that I work with that are able to budget accordingly and really manage that from a labor standpoint, from a cost of goods standpoint, to really juice those busy months and then structure it in such a way that where you can make it through the cold winter months and create a good business. So it's a big challenge and it's a good question.
And I think this is a good one for Ash too, if you wouldn't mind speaking to it for a second, Ash. The difference between markets, like say a Bar Harbor, which is going to be more conventionally seasonal, versus the Portsmouth, which might have a bit of tourism to it, but is going to be more of like the conference slash. Can you expound on that maybe for the question?
Can you repeat that question?
Oh, sorry. Speak a little bit about the seasonality and how best to accommodate for taking it into account in development or in your area.
Oh, so the development cost, or
no, just how to account for seasonality in how you plan, I think. I hope that's right.
Just the planning, the cash flow.
Yeah, yeah.
Okay.
How to make it work.
So I think everything starts with people first. So you first make sure your labor is well managed. You understand that model clearly, crystallize that to the schedule. I think first that goes into it. And then cash flow, make sure liquidity is kept enough to handle that kind of seasonality adjustment. The rest will take care of itself.
Yep. See, this is why Ash has done so well. It's very simple. All right, well, we've run over time by 15, 16, 17 seconds here. I think I am supposed to tell you that we are done. I'm seeing a red sign in the, oh, I'm getting the hook. We are out of time. So if everyone would please, especially on this side, stay seated, because we're going to open up these things. But thanks for coming in. If you've got questions, I know that Ash and Nick have their info available. Feel free to reach out. We'll try and be responsive. Thanks, everybody, for coming in. Let's give them a round of applause.